DC and worked for a year and went to grad school and then moved back to Orlando shortly thereafter. My business interests are multifamily, commercial, industrial real estate. We do investment management, development of real estate. We also do civil construction and surveying and materials recycling in the Central Florida area. My investment interests are stocks and equities, real estate, and cryptocurrency. Some of my personal interests up there, and I've got a couple of disclosures for you. Number one, do not consider this financial advice. Do your own research. And number two, I do own interests in various tokens and coins discussed here. So what is the purpose? What is the goal of me speaking to you guys today? For me, my purpose is just to introduce. I want to make sure that I make it clear the amount of information that there is to learn about this topic is tremendous, very, very vast. So this is really just an introduction, and it's what I hope to give you guys, or what I hope you get out of it is, if this is something that you're interested in, I think what you'll learn today will help fast track your own effort to build a knowledge base as you go forward. So we'll talk about things like Bitcoin, blockchain technology, altcoins, smart contracts. We'll cover non-fungible tokens or NFTs, play to earn gaming, the metaverse, current news, and then all these things and you. How would you learn? How would you start? What are my recommendations for where to go? All right, so I always like to start with this graph right here. And I think, are you able to see my pointer? I hope that you can. I think you can. So on the left side of this graph here, this is a measure of our confidence. This is a typical thing that happens to any human being that begins to learn about a new subject. They begin to learn and very quickly have a steep rise in their confidence about a subject, leading all the way up to what the Dunning-Kruger effect calls the peak of Mount Stupid, right? And then as you learn a little bit more and realize that maybe you are wrong on a few things that you may have learned, or have some failures on your journey and investment into this thing or that thing, you start to lose confidence again, and you start to question yourself, and you go into this valley of despair. And so I just want to make sure that you guys are patient with yourselves and recognize that the journey from knowing nothing about a particular subject to a guru on a particular subject is a long one, and not to get easily overtaken by this early sense of confidence that happens to all of us as soon as we start learning about a new subject. It takes time and experience to really gain an insight. Okay, so what is cryptocurrency? I think it's useful to start with just helping everyone understand that there's Bitcoin and there's really kind of everything else. I kind of really would edit that to say there's Bitcoin, there's Ethereum, and then there's everything else. So this graph demonstrates the area in orange is the total market capitalization of Bitcoin. So how big is Bitcoin? So Bitcoin has crossed, at one point, I think it's below it again, but it crossed $1 trillion in market capitalization. What does that mean? What is market capitalization? What that means is, let's just say I own a company, and that company is worth, $1 million, to use an easy round number. If I split up all the shares of that company into 1 million shares, each share would be worth $1. So the way that I would say my company is a market capitalization of 1 million would be, I'd say, well, how many shares of the company exist? 1 million shares. And how much is each share trading for or worth? $1. Price of a share times number of shares is market capitalization. So Bitcoin's market capitalization is arrived at by taking the total number of Bitcoin in circulation multiplied by the current market price of 1 Bitcoin to get a market capitalization total. So this really is a representation of how much money the world has placed into the different types of cryptocurrencies. As you can see, the orange is Bitcoin. This gray area right here is Ethereum, and then it goes on and on downward from there. So it really is Bitcoin, Ethereum, and then the other things. Tether even really, this is an interesting concept that I want to teach today as well, and that's called a stable coin. A stable coin is a little bit different than, say, Bitcoin, for example. A stable coin is made specifically to peg or hold at, say, for example, $1. So if you want a digital version of a dollar, what a company does is a company will hold in a bank the exact number of actual dollars that mirror the digital token, or another example is the US dollar coin, USDC. A company called Circle issues the USDC. So if you want a digital version of a dollar, the company Circle has provided you that product with the US dollar coin. So it's different. It doesn't go up and down in value. It's almost like holding cash, but in the digital version, in a digital way inside a cryptocurrency wallet. So this is the next graphic I have for you. I really like this as a way to just kind of start the conversation of what is Bitcoin? How does it work? So if you take a look at the top of this graphic, Bitcoin is a worldwide, decentralized, peer-to-peer network. Miners create Bitcoin by using computers to solve mathematical functions, and these same processes verify transactions. Bitcoin exchanges trade conventional currencies for Bitcoin, offering a way in and out of the market for non-miners. Individuals and businesses create wallets that allow them to send and receive Bitcoin. Now, individuals and businesses create wallets. We're going to get into what each of these little graphics mean in a bit, but this is a good way to just visualize the four main things that you can say to describe Bitcoin. And then finally, cryptography secures the network, ensuring that all balances and transactions are safe. Okay, so what is Bitcoin? More on this. So it is a distributed ledger of transactions on what's called a blockchain. What does that mean? So let's pretend that everybody listening to this talk right now started with $100 in front of them, and also a pad of paper and a pencil. And that $100, we then over time exchanged money between each other. Like say, Janik gave Gilroy $1, and then Gilroy gave Horace $3, and then Horace gave Rochelle $2, and somebody gave me $10, and then I gave somebody else $15, et cetera, et cetera. If at every time there was any transaction between us, if each one of us wrote down that transaction, who gave who, what amount of money, and how much, at any moment, any of us could tell the truth about who has what. And so as we went through step by step exchanging money, at any point, we all could agree on what would be called a consensus regarding what is the true ledger of how money has been exchanged thus far, and who is holding what dollars. I hope that makes sense to all of you. That really, what I just described on using a paper and a pencil, is exactly how the Bitcoin protocol runs and exactly how a distributed ledger works. It sees and keeps track of every exchange of money from one digital wallet to the other in real time, and then using the internet validates the ledger or the record of who has sent who what money, and tests for agreement among the entirety of all the millions of computers that are running the Bitcoin protocol at any given time distributed throughout the world. What does that do? That makes Bitcoin really unhackable. It makes it an immutable ledger of truth, of exchange, trustless, permissionless truth. You don't have to trust any third party in particular that your transaction is going to take place, because the entirety of the network is made to perpetuate that ledger of truth. So a couple of questions that I hope that you guys ask yourselves and determine from this talk. Is it digital money? Is it a store of value? There are people online, there are people in the world that argue both sides of those questions. Is it money? Is it digital money? Could it become digital money? Is it really a store of value? People use gold as a store of value. People throughout history have used even something called a totem, which is a stone, as a store of wealth, as a representation of value. We use paper dollar bills. So humans have made all kinds of different things stores of value. You have to decide for yourself whether or not Bitcoin or other cryptocurrencies are one. So how many are there? What's the playing field here? What are we talking about? So there's not enough for every millionaire in the world to own one Bitcoin. It's not even close. There are over 60 million millionaires in the world. There are only 19.5 million Bitcoin currently in circulation. Now, of course, Bitcoin's digital, right? So Bitcoin can be segmented up or devised to 10 decimal places. So it's not as if these are only tradable or usable in terms of 1 Bitcoin or 2 Bitcoin or 3 Bitcoin. You can move or trade 0.000001 Bitcoin. kind of like you can use a penny instead of a dollar, but they're divisible even farther than what a penny is for a dollar, right? So what's blockchain? Blockchain is both a conceptual and practical revolution and development. And it was created with the creation of Bitcoin. So the title of this talk, I want to address that for a second. It was like cryptocurrency decoded or something like that. And please don't worry, I'm going to bore you, but I'm not going to bore you with math. All right, we're not going to get into the cryptography or the computer programming of how cryptocurrencies and Bitcoin works. This angle of this talk is much more geared toward somebody who is an academic or somebody who's curious or somebody who is an investor, somebody who's a business person. So it's more from an economic standpoint than it is from a computer programming or mathematics standpoint that we're talking today. So what is blockchain though? So blockchain is a very, very important invention, innovation that occurred with sort of somewhat by accident or in tandem with the creation of Bitcoin itself. So you can find some quotes online of some really, really smart people in the technology sector saying things like that it will bring a revolution or an innovation that's as big or even bigger than the internet itself. Pretty strong words. So why though? Blockchain eliminates third parties. It reduces transaction fees. It enables full participation and investment regardless of individual. This is a big one. We're going to get more into what I mean by this. It allows for fractional tokenized ownership. We're going to cover that last bullet point more in a later slide, get into what I mean by some of those things. I thought this was a really useful graphical representation of what we just explained, right? Take a look at the left side, this centralized network on the left. This is a bank, right? This at the center of this is a bank, and every one of these little nodes that you see is you, me, and any individual customer at that bank. So the truth of what this particular customer has with that bank is known by that customer and the bank. And the server of the bank is who records and holds the history of transactions and the bank statement for that particular individual. And how is that different from Bitcoin? Bitcoin is a distributed ledger where each one of these nodes can see the entirety of the network and validates the entire network. That's what makes this hackable and this really unhackable, because in real time, these things are checking on each other and rejecting anyone who sort of changes the ledger, would try to steal money from someone else's wallet and say, no, I really have more Bitcoin than what you say I have. Well, the other millions of people that are in the distributed network would say no and reject this. Altcoins, how many are there? So we've got Bitcoin, we've got Ethereum, there's a few others, right? So there's over 20,000 other types of digital currency or cryptocurrency that exist today. What's the difference between them? So we have nowhere near the amount of time necessary to cover that, but we will cover at least Ethereum and some other little ones. There are so many different applications and functionalities. Ethereum came along, and if you're interested in Ethereum, reading about this fascinating story, book recommendation for you to jot down. The Infinite Machine by Camilla Russo was a really good read. So Ethereum is a cryptocurrency that came along and improved on what Bitcoin had in a way. The way that it improved on, from a technological standpoint, the way that it improved on what Bitcoin had was it created the ability for what are called smart contracts. And smart contracts enabled something else, which took the world by storm in 2020 and 2021, called non-fungible tokens, or NFTs. We'll talk a little bit more about that in a little bit. But smart contracts just generically are the software's ability to execute a particular exchange given certain conditions. That's a very generic way to say it. But there's a lot of innovation that has already happened and that is expected to happen as a result of the ability to program smart contracts on the Ethereum or other smart contract capable platforms. All right, so first, I like to talk about cryptocurrency. As you can probably tell, I'm a proponent of Bitcoin cryptocurrency. I think they're fantastic innovations, but I also really like to give the other side and try to scare you along the way as well, because it's an industry that's very, very healthy to go into with an appropriate level of caution, an appropriate level of pause. So let's do some of that. So if you have a Bitcoin wallet and you try to send your Bitcoin to some other wallet address, and let's just talk about what I mean by that for a second. If you open an account on what is called a cryptocurrency exchange, such as Coinbase. You may have heard of Coinbase. It's kind of similar to if you went to Bank of America and said, hey, I'd like to open a checking account. You would exchange some information, and then you'd be able to access your checking account from your phone or on your computer or whatever. The same is true of E-Trade or TD Ameritrade or Morgan Stanley. If I want to trade stocks, I need to go to a brokerage house like Morgan Stanley and open an account to be able to log in and purchase stocks on the stock market, right? So similarly, a cryptocurrency exchange is a way for me and you to go to a company and say, I would like to buy Bitcoin or cryptocurrency. Exchange of information, open an account, and in my account, I have the ability to hold Bitcoin or Ethereum or possibly many other types of cryptocurrencies. And the blockchain on which the cryptocurrency lives and operates, Bitcoin, for example, is on the Bitcoin blockchain. ETH or Ethereum is on the Ethereum blockchain. If I try to send Bitcoin to some other wallet's Ethereum address, it's lost forever. Similarly, if I try to send Ethereum to a Bitcoin address, it's lost forever. Of course, if I send Ethereum to an Ethereum address, the Ethereum moves over to the other address. So you can accidentally lose something called your private keys to a private wallet, or fall victim to one of many scams to get into your wallet, and the contents are gone forever. So with cryptocurrency, there's this theme, and it's very much self-custody and self-control and personal responsibility. So if you do all the things that you're supposed to do, like keep your private keys private and keep them secure, you're good. Your money is extremely secure. If you don't, it's not. So useful reading to tamper down expectations and hone your ability to allocate an appropriate amount of capital to risky new fields of investment. A couple of things here we've got to talk about. If you don't know what a Ponzi scheme is, please Google this and look this up. This has nothing necessarily to do with cryptocurrency, but just as a young investor, as somebody who has the ability to put hard-earned money to work for yourself, it's very important everybody understands what a Ponzi scheme is. They're very smart, very successful people who have been taken advantage of, not once, not twice, many times throughout history. So please make sure you read up on Ponzi scheme. And then there's this other concept, it's called the greater fool theory, that we'll cover. So during a market bubble, we all know what a market bubble is, right? People get really excited about a particular investment, and the price of a good or service or product skyrockets to an unreasonable level, right? This was all dot-coms and the dot-com boom of 1999, the late 90s up to the crash of 2000. This was the US housing market all the way up to 2005. Through 2005, all the way up to 2007, 2008, when the housing crisis occurred and the crash, right? Markets have bubbles. They will have bubbles in years to come. We will not learn our lesson. This will happen again. You could even say that it was the crypto market in 2017 and the crypto market again in 2021. And then there were some sharp corrections off of those times. So the greater fool theory goes something like this. I'm buying this investment or this thing, not for the underlying value of it. I'm buying it because I believe that I can sell it to someone else for a higher price at a later date. There's a greater fool out there, and they're just kicking the price down the road, right? So my favorite story, please Google this, about this to give you perspective, is tulip mania. In the 1500s in the Netherlands, there was an importer who brought in tulips to the area for the first time, the flower, a real live flower. And at that time, it became a social status to have a tulip on your clothing or whatever, to pin it to your clothing. And it became very fashionable, and people started to really demand tulips. And so what happens when demand goes up and the supply is limited, because tulips don't grow in the area that this occurred, they had to be imported in, and that was slower than the amount of demand that increased for these tulips. And you can imagine what happened. The price to buy a tulip, the privilege to have a tulip and put it on our jacket, went up and up and up. Then speculators came in, investors, people who said, I'm going to buy up tulips when they come in town for whatever the price, just because I know that I can sell it to somebody for an even higher price in a day or two or a week or whatever. And that happened. It got so bad that people were purchasing tulips for the price at that time of around what it cost for a single family home. Of course, this completely crashed to the ground. This is a live tulip that dies, right? But that represents humans' capacity for this greater fool theory type behavior. Terminology. All right, so we're going to talk about a lot of these things. These are things that you're going to see when you read. We're going to talk about Web3, exchange, custodial wallet, hot and cold wallet. Let's cover that right now. We talked about what a cryptocurrency exchange was. I gave you Coinbase as an example. It's where you, me, or anybody can open an account and begin investing in cryptocurrency. The thing specifically to know about an exchange, or how to contrast an exchange, which gives you what's called a custodial wallet, and what is a private hot or cold wallet, is very, very important. When you open an account with Coinbase, or if you had opened up an account with FTX or Binance or any of the other cryptocurrency exchanges, they are actually holding in a cryptocurrency wallet your crypto, and they're just graphically representing to you, hey, here's what we have of yours. You truly don't have it, they have it. And so if they misuse it, which unfortunately in this industry we've seen time and time and time again, exchanges either get hacked, misuse, commit fraud, steal, et cetera, et cetera, et cetera. It's been a very, very bad, it's the Wild West in cryptocurrency. Less so now, but more so in the first decade of the industry. Those exchanges are just people, or groups of people, right? So they're subject to bad behavior, and you're essentially trusting them with your money. That is not the case with a hot or cold wallet. You're trusting you. So a private cryptocurrency wallet where you hold what are called the private keys to that wallet. We need to contrast very clearly between a custodial wallet that you get on an exchange. So understand those differences. We'll talk about hot and cold wallet more later and what that is. So the public and private key on any of these wallets, whether it's a custodial wallet on an exchange or your own hot or cold wallet, you get a public key or a public address and a private key. Very big difference between the two. The public key or public address is the way that you would say, here is where my wallet is in case you would like to send it money or tokens. It's kind of like saying my address to my house is this if you want to send me something in the mail, right? It's a way that people can find you. The private key is very different. That's the way that you can, on any device, access your own private wallet. So what happens if somebody else gets a hold of your private keys? Well, they can access everything that's in your wallet as well. So the private key is very important to keep secure and to keep safe. Many people choose to keep their private keys in a safety deposit box at the bank, so that it's very, very secure. Nobody could ever get it. If you lose it, you also lose the ability to access your crypto. It's literally like the front door key to your house, except there is no locksmith. Okay, next thing, NFT. We covered non-fungible token, metaverse, token versus coin. So a coin is the, like Bitcoin is a coin, it says it in the name. It's a coin because it lives on its own blockchain. It is the native currency of a given blockchain. So Ethereum's blockchain, the native currency of Ethereum's blockchain, is ETH. And so ETH is a coin. But Polygon, the Matic token, is a token that actually lives on and works on the Ethereum blockchain. It's a layer 2. So the next thing down, layer 1 versus layer 2. Layer 1 is just a term that refers to the primary blockchain, and layer 2 is a protocol built on top of the primary blockchain. There's a lot of reasons why layer 2s are built. Just to give one example, Ethereum is an improvement on Bitcoin when it comes to speed and cost of transaction, all the way until the network gets very, very busy. And Ethereum has a lot more transactions than the Bitcoin protocol does. So Ethereum's gas fees, or the cost to transact, to send money or to do a transaction on the Ethereum blockchain, can go up, can get high. And so what layer 2s do is it gives an opportunity for people to exchange on something that is a more efficient protocol that still works on top of the Ethereum blockchain. DAO, DAO, was something that got really, really popular and lost a little bit of steam lately. It's a decentralized autonomous organization. And a lot of people use this concept. Let's say we want to form a company, and that company, we want to have 20 members of the company be able to cast a particular vote. Well, if we're all in the same geographic area, that may be done one way. In a decentralized fashion, we can issue a cryptocurrency token to each one of the people who are granted a vote, and then be able to facilitate decision-making through the validation of the holding of any one of those tokens. in a very easy and automated way. In addition, the token holders, let's say I own one of the 20 decision-making tokens to company A, decentralized autonomous organization A, and I want to sell my interest or give my interest to somebody else to be able to exercise that right of a vote. Well, that's as simple as moving that from one cryptocurrency wallet to another. I can sell it to someone, and then they can exercise their influence of that decentralized autonomous organization. There's a lot of famous ones that have been formed. I think one of them put a bid on the original version of the Declaration of Independence. A big group of people got together and pooled money in order to complete the purchase of the original Declaration of Independence. I could be messing that up. It's an important historical document, but that's just an example. There's been a lot of DAOs that have been organized to try to go after really big targets. It's a way to pool money and then share decision-making resources over some goal like that. A white paper is it's a summary that is written by any one of these Web3 projects, cryptocurrency projects. It's a way to communicate to investors or the public the general basic concept of the project and of the investment. So you're going to see that term out there if you go reading. You'll see white paper. All right, so let's have some fun now. We're going to get into some financial fun, and then we're going to get into some Web3 fun next, some gaming fun. So Bitcoin's price history, let's take a look. So on the left side right here in July 2010, you could have bought Bitcoin for 6 cents. In 2012, could have bought it for 10 bucks. 2015, as recently as, 8 years ago, $250 per Bitcoin. And then we see the price blow up all the way to 19,000 in December 2017. That was one of those localized peaks. It crashed all the way back down to 3,400. And I love when people say that, it crashed to 3,400. Take a look at the difference between 2015 and 2019. I always love that when people say that. And they're saying it now. We ran all the way up after COVID to 69,000 in October of 2021. And it has again crashed all the way down to 26,000. That's something called a recency bias. It's very common for people to, on the outskirts of something, just hear little tidbits about something and have that feeling, oh my gosh, it was all the way up 69. Those poor people who have Bitcoin, because it's all the way down at 26,000. It's easy to forget that those people may have bought that Bitcoin in 2019, where they would have been nearly 10x, or 2015, right? So in parentheses over here, what this represents is if I had put $100 or bought $100 worth of Bitcoin back when it was 6 cents, that $100 would be $416,000 in July of 2015. It'd be $43 million today. So what is $100 worth now? This is another way to look at that same thing. If I had invested $100 at any one point in time, as we saw, if it was in 2010, it'd be $43 million today. If in 2012, I had said I'd like to invest in Bitcoin, I would have $260,000 for every $100 I put in to the investment at that time. And then the numbers as follows. You'll notice this is the one time if I had bought in the peak of October 2021, I'd only have $38 for my $100 that I had invested. But also note that even if I had bought in this previous peak in 2017, we've stayed above that previous peak. I haven't come back down to that level again since that time. Typical anti-crypto arguments. Number one, returns are based entirely on speculation. Again, the greater fool theory. Since there is not a compelling use case, contrary to owning a share of Apple, for example. Apple produces a product, sells goods. Bitcoin doesn't. A lot of people say that it is itself a product, it is a service, right? But that's for you to decide. These are just what typical detractors say. It was hard for me to even write some of these because, make sure that you go and do your own reading. A lot of these are myths, especially 2 through 5 here. They're myths that are just uninformed positions. Definitely go do your own reading, but this is what people say. Number 2, institution and middlemen are a good thing. We don't want to eliminate the inefficient middlemen in particular systems or processes. Number 3, it enables bad actors. Don't people use cryptocurrency to perform illegal activities? Number 4, it doesn't meet the definition of a currency, is another critique. And number 5, mining consumes huge amounts of industry. And mining, of course, I don't think we've covered this. Bitcoin mining is the way in which computers operate to secure the network and to facilitate transactions. mining produces new Bitcoin as a reward for the companies that engage in cryptocurrency mining, Bitcoin mining. Bitcoin uses what's called a consensus protocol called proof of work. That's just a way to say the computers have to actually perform math. They have to solve mathematical equations in order to earn the reward of facilitating transactions and validating the network. They earn that reward as a result of the energy use, the mining activity. Again, the details of why that works and why you would do that is embedded in studying cryptography and why that incentivizes and works to secure the network correctly. Other cryptocurrencies use a different consensus mechanism. They use a proof of stake consensus mechanism, which uses significantly less energy than a proof of work. But Bitcoin does still use a proof of work consensus mechanism. Ethereum used to, and Ethereum has switched over to a proof of stake consensus mechanism. But again, even number 5, there's a lot to unpack there. There's a lot to learn. I'd encourage you to go reading about that. This is an interesting one to me. So pro-Bitcoin crypto arguments, I'm going to hit you with the biggest statement up front, and you could really just stop there. It provides trustless, cheap, fast, permissionless, immutable, unhackable access to storage and transfer of value. All right, so compare this to cash. If you have more money in your life than you need to survive this month kind of thing, you have excess, you want to invest that money. You'd like that money to keep its purchasing power or hopefully even grow in time. You'd like to make money on the money that you have saved. Or again, at a minimum, if you have $100 saved, next year you'd like to be able to buy the same stuff that you could have bought this year. You don't want that purchasing power to go down or erode. Now, is that true of cash? Are we subject to rising prices pretty much anywhere in the globe? That's called inflation, right? So we know that we are. And so with cash, you're planning on the risk of, well, I'm going to save this, but I'm going to be able to afford to buy less things with this next year than I do this year. There's these other options of what do I do with the excess money that I don't need to spend this month? I can buy stock, I could buy a bond, I can buy gold. Cryptocurrency just provides another option, and it's up to you to weigh the pros and the cons of choosing, say, Bitcoin to do that. Let's talk about remittances for a second. Remittances, of course, are money earned in one particular country, but sent to friends or family members in another part of the world. That's what a remittance is. A lot of people do this. They move away from parents. Parents are in an economically disadvantaged country. They work and send money back to their parents. This is $840 billion a year gets sent in the form of remittances. So this was interesting. The transaction costs of doing that right now are $3 billion just to people sending remittances to Nigeria, one country, in 2021 and 2022. It's $60 billion annually in transaction costs. This is one of those things, just one of those things that cryptocurrency, Bitcoin, among all the others, aim to solve or can solve, which is, again, a transaction. I can send somebody in the Philippines, $1,000 right now in literally a matter of seconds for pennies. So it significantly reduces the difficulty, the time, and the cost of sending remittances or any other payments cross-border. Number 2, it creates jobs in the energy sector where trapped and clean or green energy is not being utilized. I'd encourage you, this is where I said there's a lot to unpack here. There's a flip side to that coin of it uses a lot of energy. Read about the story in Uruguay and how trapped clean energy is being utilized and what that's doing for that economy over there. Number 3, it enables and will enable unprecedented levels of access and participation in investment choices, independent of gender, race, socioeconomic status through tokenization. All right, what do we mean by that? So, and even in the United States, if I am a typical American, can I participate easily in the investment benefits of owning an apartment complex? I can't unless I have, I don't know, a few $1 million or a couple $100,000 in good credit. So that's just an easy example to give. Think about all the other areas of investment that people who are overseas aren't able to participate in. If we could take a piece of real estate and tokenize it, or chop up its ownership into different, what you might think of as shares if it was a company, but in this case, it would be individual unique tokens that people could buy and then exchange over time. I could be in Rwanda and I could own an apartment complex in Miami through tokenization, through fractional ownership of something like a piece of real estate. And then you can expound on that from there. I mean, publicly traded companies could even take, I don't know, a cruise ship and say, who would like to own the profits associated with the operation of this cruise ship? We're selling fractional ownership in the form of a cryptocurrency token for you to earn the majesty of the seas. So there's all kinds of opportunities or possibilities through tokenization. And again, through the blockchain, it is permissionless, it is pseudonymous. So you can participate in these kinds of things without somebody knowing you're Jane Smith. So the biggest basic arguments for crypto continued: decentralization good, government control bad. All right, so why do people say that? This is a constant theme of people who are proponents of Bitcoin and cryptocurrency. Let's just talk about what debasement of the monetary supply means. So this might surprise some of you, but in 2020 and 2021, the money supply, the amount of US dollars that existed that were in circulation, grew by nearly 40%. The advertised inflation rate is misleading, right? So what do we know about supply and demand and price? What do we know if the supply of something goes up significantly? What does that do typically to the value of that thing? Typically will make the value of that thing go down if demand were held constant, right? So in the United States, we're familiar with, you know, these 5 and 6 and 7 and 8% inflation rates that have happened over the last few years, but there are many, many countries that are experiencing more than 10% inflation rates. Forget about debasement rates. We're just talking about inflation rates, the measured increase in the price to buy a good or service. And again, that's something that's done using what's called a typical basket of goods for the US household in the United States. I'm not sure exactly how it's done in other countries, probably a very similar mechanism. And again, it's done by that very same government that may be printing and expanding the money supply to serve their own interests. So, you know, debasement is something that goes back a very, very long way. Oh, and I didn't say this. So 10% inflation rates is an understatement. There are many, many countries throughout the history of time, and several countries just within the last 10 or 20 years that have experienced inflation rates in the hundreds of percents. So what does that mean? That means that $100 would buy you, you know, a certain number of gallons of milk or loaves of bread this year, and next year it would buy you half of that. So this is the kind of thing that has eroded the wealth in countries like Argentina, countries like Venezuela. If this is news to you, I mean, this is just the tip of the iceberg. Definitely go read about this. So the oldest example about this that I could find that I liked was the Roman Empire. So Nero in 60 AD reduced the content of silver that was contained in the Roman Empire's coins. They were 100% silver coins, and they found a way to inject some other less rare metals to be able to expand the money supply from 100 down to 90%. So this was something that stuck, and they continued to reduce the amount of actual silver that was in their silver coins. 200 years later, it was down to only 5% silver in the coins. So the inflation and loss of purchasing power over that 250-year period reached over 1,000%. And what have we done in the United States? At one point, we removed the backing of our US dollar by gold. That first it was gold, then it was silver, and then it was the good faith in the US government, good faith and trust in the US government, something like that. Our dollar is now not tied to any gold or silver. And so when you're in that sort of a situation and you have a government that continues to print money, and you know, the US government has done a decent job of controlling inflation at this point. There are governments all over the world that are not. You know, Turkey's another one. So what do the citizens who are holding assets and cash in those societies have to turn to? And ultimately, you know, Bitcoin and cryptocurrency is an answer for many of them. Because again, the supply of Bitcoin is specifically controlled, and it will never be more than the 21 million. We have observational adoption as well. There are corporations holding BTC and occasionally ETH on their balance sheets. MicroStrategy is a publicly traded United States company that holds over $5 billion worth of Bitcoin. They're the largest individual holder of Bitcoin in the world. Tesla holds between 1 and 2 billion on their balance sheet. KPMG, one of the 4 big accounting firms in the United States, holds Bitcoin and ETH on their balance sheet. And BlackRock, we'll talk a little bit more about BlackRock, but if you don't know who BlackRock are, they are the largest manager of money. They're the largest money manager on the entire planet. When countries need an organization to manage the country's money, oftentimes it's BlackRock that does that. They manage over $12 trillion. So why am I telling you guys this? So, these are news bits that didn't happen through 2015, 2016, 2017. This is just like in the last 5 to 7 years or so that some of these really, really big world players have without saying it, some with saying it, but some without saying it verbally, they're saying it through their actions. We believe that there is a future here, and we believe that there is a value that is stored inside Bitcoin and these potentially ETH, these other cryptocurrencies. So the news has been so bad. Again, one case of fraud after the other, one bad actor after the other when it comes to the cryptocurrency exchanges. So I asked the question, are more and more people still adopting cryptocurrency? Is it all over? Let's take a look at a graph. This is not a graph of Bitcoin or of cryptocurrency usage. It's a graph of internet users. If we take a look at this, this is internet users in millions. And this is all the way back at 1990 here at the beginning of the graph. And we have this all the way up through, I think this was the best one I found, but this was actually made in like 2014 or something like that. And they just projected from here. None of this stuff over here is really relevant to the point we're trying to make. So this is internet users, and this is called an adoption curve. And it usually takes this S-shaped pattern where you have very few people signing on or signing up at first. I remember the late 90s. I don't think there's anybody on here who's old enough to remember the late 90s well, like I do. But I remember in the 90s, there were people who would say, yeah, that internet thing, I'm not so sure everybody's going to be using that. That's really for certain people, not for everyone. And how silly does that statement sound now? So then you have this later sweep of an accelerated adoption where you don't know what's going on if you're not on the internet kind of thing, right? And then finally you have what's called a market saturation. It reaches the top of where it's going to go and slowly continues to climb from there. All right, let's take a look at the internet versus crypto adoption on the same graph. So as you can see, it's pretty easy to say that these are following the same path. So this is the internet user timeline back in the mid 90s. And then we have the blue is the cryptocurrency user timeline from the 2015 to 2022 period. All right, so these are following an extremely similar pattern of technological adoption. And here's the real economic or business insight, I think, that can be drawn from this. Where are we now? Currently, there are an estimated 420 million people who use or own cryptocurrency. All right, so I want to go back. Oh, geez. There we go. I want to go back here. So where is $420 million on this graph? Is it up here? 420 million users is about here. So if we were to say, like, where are we in the process of the adoption of cryptocurrency? So far, if you remember from the other slide, it's following the same exact pattern that the internet usage followed. So here we are right here in cryptocurrency adoption. That's pretty compelling. So currently there are an estimated 82 million cryptocurrency wallets. That means only about 1 in 5 people are using a private wallet. Most people are still, even after all of the things that have happened, still using an exchange. All right, so let's just talk about major milestones in the history of Bitcoin. So in 2008, that's when it started, by the way. 2008 started with the white paper that somebody named Satoshi Nakamoto released. Some of you may know this, you may not all know this, but no one really knows who that is. It is theorized that he actually passed away, but he was never, publicly known. But Satoshi Nakamoto is the pseudonymous, the pseudonym or the nickname, so to speak, of the person who released this white paper and created Bitcoin. Then we have this day called, that is referred to as Pizza Day, May 22nd, 2010. It was the first time that someone bought an actual product using Bitcoin, and it was used to buy 2 pizzas. He spent 10,000 Bitcoin, because at that time it was worth pennies, right? He spent 10,000 Bitcoin on those 2 pizzas. Those 10,000 Bitcoin today are worth $260 million. In 2014, it was a hack that took place, a very big cryptocurrency exchange hack, and it was robbed of 850,000 Bitcoin, which was a $22 billion heist in today's terms. In 2015, Ethereum launches. In 2017, there was an improvement to the protocol, the Bitcoin protocol, called the SegWit activation, and it enabled layer 2 scaling solutions like something called the Lightning Network for Bitcoin. The Lightning Network is kind of similar. I gave the Ethereum example before. It's just a way that enabled Bitcoin transactions to occur cheaper and faster, given if the market got, if the network got a lot of activity on it. In 2017, there's been more since then, improvements to the protocol. The Taproot protocol was another one recently that improved Bitcoin. So in 2017, Bitcoin futures launches on 2 Chicago-based exchanges, getting more and more mainstream here. So let's cover just for a second what is a future contract. So if you don't know what a derivative is, this takes a little bit of reading, but the gist of it is it's a financial product that enables someone, an investor, to make a bet. And you might say, for example, I think a barrel of oil is going to be sold for more in 6 months from now than what it sells for right now. So I could place that bet by buying what's called a futures contract, where I would basically make a return if I'm right and the barrel of oil is more later than it is now. Now, for futures contracts, the issuer of that contract this is a critical thing to understand. They're not required to actually buy the underlying asset. All right, and we'll get to why that's important later. There's another type of contract called a spot contract, a spot ETF. And that's where the issuer, the financial institution that's allowing an investor to purchase a stake in the thing that they're betting on, whether it's oil or gold or Bitcoin perhaps, they actually have to purchase that thing. They have to purchase and hold that good. Kind of in a similar way that Circle, the company that issues the US dollar coin, they have to actually hold the dollars that are associated with the USDC digital token associated. Okay, so now we're on to, I skip all the way over here to 2021. So in 2021, El Salvador, the country, makes Bitcoin legal tender. I think there are several others where Bitcoin is also legal tender now. 2021, Bitcoin also passes the $1 trillion in market cap point. So it went from not existing to something that was worth $1 trillion in about a decade. It's pretty amazing. 2021, the company Morgan Stanley, a very large investment firm in the United States, offers access to Bitcoin investments. Again, these were futures contracts to clients, just more and more what we call mainstream adoption. 2022, we had, again, a really, really bad news year. One of them was Terra Luna collapsed, which was at the time the 3rd largest cryptocurrency. It was a stablecoin. And then we had FTX collapse in 2022, another cryptocurrency exchange. So what's going on now? A lot of good things. A lot of good things. February 2023, the state of California partnered with Oxhead Alpha to utilize the Tezos blockchain for the storage and verification of titles and registrations. Now, there's probably many more examples of blockchain being used as an innovation that changes a system, disrupts a system. We all know that word, technological disruption. So I would argue that this is like one of the most, to me, this is one of the most compelling ones, where we have a state government that is adopting the use of blockchain technology to make what is a very well-known and hated experience for many people, the trip to the DMV, more efficient. And to me, again, it's the tip of the iceberg. We're scratching the surface of the technological innovation to what blockchain can do for systems of information. June 2023, BlackRock, again, BlackRock, the largest money manager in the entire world, sort of the godfather or the inventor of what's called an ETF. Let's just cover what that is for a second. An ETF stands for Exchange Traded Fund. if I have an account with a brokerage account and I log on to that account, I can look at all the different stocks that there are traded on the US stock exchange. Like, for example, if I wanted to buy a share of Amazon or of Google or of any one of these big companies that we all know, I can go onto my Morgan Stanley or my TD Ameritrade account, which I think recently got bought by Morgan, maybe it was Morgan Stanley. And I can log on and I can say, I'd like to buy a share of Google, and I can exchange my dollars to own a share of that company. We all understand that concept, right? So what an ETF is it's where one of these financial institutions says, hey, instead of just own one stock, how would you like to buy this thing, this ETF, and it will represent a whole bunch of stocks, right? It's a way to diversify your portfolio with a simpler purchase than buying all 100 stocks of the NASDAQ 100. I can buy just one stock that represents all of them that this company offers me. So an ETF is a great investment vehicle. And what BlackRock has done recently, as I said, is they've said, we would like to make it so that someone can log into their traditional brokerage house and just buy this ETF that represents Bitcoin. And we, BlackRock, will hold all of the Bitcoin because it's a spot ETF. We actually have to buy Bitcoin, and we'll hold all the Bitcoin that represents what someone can buy using their traditional means of accessing investment, right? So what I think, and what many people think, is this would be a massive, massive moment for Bitcoin, really probably for ETH as well, because it's likely that ETH would get one in the coming years as well. Because what happens, again, let's go back to that supply and demand thing. There is a tremendous amount of money that is available for investment in the world. That figure, by the way, is about 420 trillion. There's $420 trillion in the world that is investable at any moment right now. So even if just a small fraction of that institutional or traditional money says, yeah, I would like to own a little bit of Bitcoin, and there is indeed this technological barrier to all the stuff I've been telling you about, to the complexity of owning a hot wallet or a cold wallet and keeping my private keys very secure, that's still quite a detractor for a lot of people. That's quite a barrier for a lot of people to get involved in the cryptocurrency world through those channels. If they could go through a more traditional channel and just log into their user interface on the account they already have and say buy, or if money managers and financial advisors were able to allocate certain portions of people's 401ks or traditional IRAs or pension plans over to this kind of thing, the demand for the purchase of the thing would significantly increase. And if the supply is fixed and more people are demanding the purchase of the item, the theory is that the price would significantly increase. And that's why you see a lot of folks in the industry suspecting that Bitcoin's price will continue to accelerate through the coming years. So this was big news. This happened in June 2023. Another thing that happened was the Securities and Exchange Commission, the SEC, who regulates securities, made an accusation to a company called Ripple. Ripple is the company that issued the XRP cryptocurrency token. It was huge, very, very big market cap. And the SEC said, you're violating securities laws to the SEC, to Ripple. And this lawsuit's been going on a number of years now. Well, in July of 2023, just a couple of months ago, the judge says, nope, not violating. This was a major victory for, obviously, Ripple, but for the cryptocurrency industry in general. To August 2023, London-based Jacoby Asset Management launched the first spot Bitcoin ETF. Again, the spot ETF is where Jacoby Asset Management, for anybody who says, yeah, I'd like to buy this ETF, Jacoby actually has to go buy the Bitcoin itself and hold it for them. So this is Europe's first one. It literally happened, I think it was a week ago. So there's a lot of stuff that I see that's happening that's really exciting in this industry. Something, again, that's already grown from $0 to $1 trillion in just Bitcoin alone. The entire cryptocurrency industry right now, I think it's underneath 2 trillion, but I think in the height of the market in 2021, it reached nearly 3, if I recall. Okay, institutional access. Could institutional access to Bitcoin be a big deal? Is the individual's technological barrier to entry still large? I covered this in the previous slide. Global investable wealth is $450 trillion out there. All right. Who thinks they know the answer to which industry is larger? We're gonna play a little game. Which industry is larger? Music? Let's see, movies, streaming, traditional TV, gaming. Which industry is larger? Get it in your head. All right, what if I told you the answer is gaming, and not just gaming? Gaming is bigger than the sum of all of those other ones combined. This is a chart, and this chart demonstrates music, films against video games. I couldn't find one of the others, a chart that contained the other ones I mentioned, the streaming services and traditional TV. But fact of the matter is, gaming is not only destroying the other means of entertainment from billions of dollars spent worldwide on the industry, it's also growing at a very, very rapid pace. So if you project this out into the future, it's crazy the amount of money that's going to be in games. Why am I talking about games? What does that have to do with cryptocurrency? Well, quite a lot, actually. So let's talk about this stuff. So the ability to, let's just talk about art for a second. So I'm gonna say some very positive things and some very negative things right next to each other when it comes to NFTs and art. All right, so if I'm Pablo Picasso and I paint a painting, that painting is unique, and the original of that painting may now be worth millions of dollars, worth a lot of money, right? That I, as an artist, have created. And what a lot of people say about an NFT, which the beginning phase of an NFT, the beginning way to introduce an NFT is it's a non-fungible token. It's a token that is represented on a blockchain. So why is it represented on a blockchain? An item of ownership, which the easiest way to picture this at first is, let's just say it's an image. I drew an image, and that image now is associated with a particular token. Now, the ownership of that token can be uniquely and forever proven to be the property of an individual cryptocurrency wallet secured by the blockchain. Again, something that's unhackable and immutable. And if the person who owns that wants to sell it or trade it to somebody else, that again is something that is seen and tracked on the blockchain. So it's a way to say this image, this digital art, is truly mine and no one else's. I hope that makes sense to everybody. And what a lot of people say is, yeah, I could just control C that. I can just take a picture of that image. So what's so special about owning the original? Well, you'd say the same thing about Pablo Picasso's original. I can go to a museum and snap a picture on my phone in very, very high definition and I can see it. But it's only the museum or it's only the collector that truly owns and can display the original. So I never understood that about the critique over owning a piece of art that is an NFT, that is a non-fungible token. But it goes so much farther than that, what you can do with an NFT, and we'll get into that in a second. So what's neat about this is that the creator, whether this is, and by the way, music is being done this way as well, whether I'm an artist that creates music or paintings or drawings or whatever form of art I want to create, the functionality of the blockchain gives me an incredible ability. And what I mean by that is I can be what's called the creator wallet. And through a smart contract, I can code into the piece of art that I may sell to the people who might like my art, something that goes like this. Okay, I'm going to sell this thing to you for $100. Now later, if you sell it to someone else, I don't care how long later, the code, the smart contract that exists associated with this piece of art says, because I've programmed it this way, when you sell it to someone else, for whatever price you sell it for, 5% of that price is paid back to my individual creator wallet, my original creator wallet. So it's a way for you as an artist to put a collection out there of art, whether that's music or pictures or whatever it is, and hard code in your commissions forever, right? So that's what a creator wallet is. Why does my second bullet say beware the NFT, right? Because what does an NFT do? It is a unique, provable ownership of an individual piece of art. True, but in 2020, 2021, 2022, the amount of new pieces of digital art that hit the market were billions and billions because of what I just explained about a creator wallet. It's so easy to pump out different and new pieces of cryptocurrency art and hope for them to be traded and hope to make money off of them being traded. So just like there's been billions and billions of people who've painted a painting, there still is the premium artist that really did produce art that the world loves. I would argue the same will be true over the digital version of said art as well, but just understand that there's billions and billions of people out there that may try to sell something that's just not that unique or special, even if the one individual unique piece is unique and yours alone. So please beware the NFT. I've seen so many people kind of get caught up in collecting an excessive amount of things that then become worthless later. Is some art? That's for you to judge. Are some a valuable token that serves as a proof of ownership for other reasons beside I like the art that's associated with this token? We're going to get into that fun question next. First, I'm going to tell you a story. I love this story. It's a story about a game called Axie Infinity. I'd love if you guys had a little thing where you could say, like, raise your hand or whatever. I'd love to know who's heard of Axie Infinity. I don't know if you guys can do that. Axie Infinity is a game that was very, very popular just a few years ago. It's an online game. People were playing it all over the world. At its peak, there were 3 million active monthly players of this game. There were tens of thousands of people in places like Venezuela and the Philippines that were making a living playing Axie Infinity. Literally in the morning, sit in front of the computer, play Axie Infinity, gain tokens throughout the day, these particular tokens, and then sell them because they had a marketable value as a cryptocurrency. That's how they were literally feeding their family, tens of thousands of people. It was the first example of and what got coined play to earn, some way to harvest or farm a valuable item on the greater market. All right, then comes along Yuga Labs. This is a fun story. So in 2021, Yuga Labs was created. Yuga Labs is a company that put out an NFT art collection called the Bored Ape Yacht Club. And within the first year, they became a unicorn. And what does a unicorn mean? It is a company that goes from launch to an over $1 billion, billion with a B, $1 billion valuation within 1 year. And that's what happened with Yuga Labs. So let's tell the story. Let's get into it. So when Yuga Labs launched the Bored Ape Yacht Club collection, it was 10,000 unique individual pieces of art. It was just a picture of an ape, nothing that special. They were pretty catchy, but nothing that special. They minted them, meaning they advertised to the world, hey, if you want to own one of these pieces of art, you can buy one from us, and we're going to sell them at a price of 0.08 Ethereum, which at that time was, I think, about $200. Again, back to the creator wallet, when someone bought it but then sold it to someone else, there was a royalty paid, a commission paid back to Yuga Labs. Well, again, what I mentioned about the unique ownership of this particular type of cryptocurrency, an NFT, a non-fungible token that represents a particular piece of art that a creator has made, the creator can do some really cool things. What Yuga Labs did is they said, if you own a piece of our art, if you own a Bored Ape, we are going to airdrop, we are going to send you from our wallet to your wallet another NFT, essentially a ticket. The ticket is to a huge party we're going to throw in New York, right? So the privilege of owning a Bored Ape now has this shine on it, and the price of a Bored Ape started to rise. Then we have potentially some of the greater fool theory kick in, right? As the price is going up and up and up, there were people that said, well, I'm just going to buy one because the price is flying so high, I'm just going to sell it for a profit in a week or so. And that continued to drive the price up and up and up. The Bored Ape Yacht Club peaked at literally hundreds of thousands of dollars per Bored Ape. The highest sale was $3.4 million. And one of these pieces of art, the Bored Ape Yacht Club, actually they had a whole collection that was in the Louvre in Paris. So, some people will look at it and say, it's a stupid picture, I don't understand. But I think that there's much more to the story, and that's what we're telling right now. So why not sell it? Like when it goes up to the peak, why would people not sell it? One small reason would be, people may associate, prestige or really, really like the piece of art. So that's some of it. The next one would be, well, I think that Yuga Labs is going to airdrop or give more things to me because I'm a member and I'm an owner. So it's essentially a high-tech version of a membership card. And the third reason would be potentially that there's ongoing benefits to just holding it, and it's called staking. And in the case of many of these, either cryptos or NFTs, that's what they do. They say, if you stake the NFT, if you put it in reserve with us, the founders, we're going to pay you in terms of some cryptocurrency token that has a marketable value in exchange for just not selling it. It's another thing that makes it hold value, right? So mint to peak to now about $200 at mint, hundreds of thousands of dollars in the craze of 2021. Right now, they're still about $50,000 a piece for the lowest priced ones if you wanted to buy one today. So what's Yuga Labs doing? And again, this all relates to cryptocurrency. What are they doing now? They've recruited top talent from the gaming industry. They have a large and growing number of NFT collections. This is another story that they did. Throughout the couple of years following the launch of the Bored Ape Yacht Club, they did a number of things in the way of creating value for the people who held the Bored Ape. They airdropped a number of things, one of which was something called ApeCoin. It's Yuga Labs' own cryptocurrency, like ETH or Polygon or one of the other 20,000 that I mentioned is out there. ApeCoin is one of those. And they said, if you hold a Bored Ape Yacht Club, we're going to send you about 11,000 ApeCoin just because you hold one. And they announced this ways before they actually gifted it. And so, as you can imagine, that again is another factor that increased the incentive and the desire and the value of holding one of them. That ApeCoin, when they sent it out, moved from about $5 to $7, if I remember right. I mean, it was literally near about a $100,000 gift to anyone who was holding a Bored Ape at that time. So why do I tell you about ApeCoin? It's for the next part of the story. They made a game. It was called Dookie Dash, and it was open for only about a 2-week period. And the only way that you, me, or anyone could play this game is if you had a particular NFT, non-fungible token, cryptocurrency. If you had this particular NFT, it was like an access pass to play the game. Who had these sewer passes? Well, they gave them to all the people who owned the Bored Apes, and then some of the Bored Apes sold them out on the open market. So any Tom, Dick, or Harry could buy one of the sewer passes, log in and play this Dookie Dash game. And they did something really creative. They said, hey, everyone who plays this game, who has a sewer pass, we're going to burn your sewer pass and give you a different NFT that does some other thing after this. So you're going to get something of value just for playing. But the person who gets the highest score on this game is going to get something really special. They're going to get a one-of-one unique NFT. And so people were playing night and day. They were buying power-ups. They were saying, I'd like my guy to go faster, or I want a 10% boost on my score. And Yuga Labs was charging them for these power-ups to play this game and try to get this high score in ApeCoin. In 2 weeks, $8 million of ApeCoin was spent by the players, just the small group of people, the 10,000 players of Dookie Dash in the world. Actually, I think it was 30,000. There was 30,000 passes given out. They raised $8 million through the sale of ApeCoin. So to me, that was the first and largest example of really monetizing and creating a sink or a function for the use of these tokens. They are gaming tokens. Now, why would they do this? The person who ended up winning the high score on this particular game that got this prize sold it. He was a professional gamer. He was a professional Fortnite player. He sold the top prize for $1.6 million. So if you guys have seen the movie Ready Player One, it really is, we're seeing the first baby steps of really gamifying and creating these interesting economies, for the thinker, the business person, the entrepreneur. This is fascinating stuff. And it's creating these new opportunities that didn't exist before. Even when Dookie Dash was going on, this game for a big monetary prize, people were hiring professional gamers to try to get a top score on their NFT. And that's what the NFT gives you the ability to do. Again, that unique ownership. I can share that in a way that protects it with a professional gamer. It's called a warm wallet. They can play on my behalf. And then I can keep the benefits of the score. I think I may have just lost one of my headphones. I'm going to switch.
All right, I think you guys can still hear me. So what else is coming? We got about 5 minutes left, then I'm going to take some questions. What else is coming that Yuga Labs is doing that relates to cryptocurrencies? Well, they are, by the end of 2023, going to launch something called the Other Side. The Other Side is their version of a metaverse. What is a metaverse? We've heard that term thrown around. It's really just a way to say it is a place online that people can log into and interact and see each other in real time in a particular digital environment. Well, unique thing that they've done, they're not the first to do it, but they said, okay, we're going to make this digital world called the Other Side, and we're going to subdivide this digital world into essentially plots of land that are represented by an NFT. Is another example. It's not really just a picture. There are other use cases for these non-fungible tokens. And what they've done is they've sold, well, they gifted a bunch of them to the Bored Apes, yet another thing on that list of what they did to create value for that membership NFT. And these NFTs are the ownership, represent the ownership of these plots of digital land. And there's 100,000 of them. That's all that there are. And a lot of people hypothesize that this is a place where a lot of the money that is being spent in the gaming industry is going to go. It's going to go to the metaverse. It's going to go to play to earn with crypto. So crypto, I think, is going to play a very, very large role in what is the largest and also the fastest growing sector of entertainment in the world. Another one I put up there is Hytopia. This is a gaming platform that is removing the crypto friction, right? Again, that's another thing we talked about with why I think the spot Bitcoin ETF is huge, because it removes some of that crypto friction for people who aren't quite so comfortable in the space. Same thing with Hytopia. What they're doing is, like with Dookie Dash and ApeCoin, I had to have a cryptocurrency wallet. I had to associate my wallet with the website. It was like it wasn't simple. It wasn't too technical or anything, but I think a lot of people would be uncomfortable with that. What Hytopia is doing is making the gaming experience, whether you're playing from your phone or your computer or whatever, feel just like any other game. There's no crypto element that anyone can even see. So that's compelling. Resources. So if you like what I had to say, if you were inspired by any of this, here's some resources for you. Exchanges. So the way that you go from dollars to crypto, the easiest way is to use an exchange and then move the money from the exchange off to either a hot or a cold wallet that you control completely. The exchange that I would recommend you doing this with is Coinbase. Coinbase is a publicly traded US company and seems to be in a very secure position right now. I don't feel uncomfortable at all sending people there. And I go there myself if I need to take dollars and put it into crypto. Hot wallets. So again, these are wallets that you own and control. It's not an exchange where someone else controls your crypto. Some examples there that are good are MetaMask and Coinbase Wallet. Cold wallets, this is how I recommend everyone holds their, if they have, thousands of dollars that's important to them and they want to have it be secure, you would want to use either an Arculus or a Ledger. There's some other ones as well. But what this does is it's like a multi-factor authentication. Say, for example, someone got a hold of my private keys that I don't want to let anybody touch. I also have a physical item, a card or like a USB that validates that I'm me and that's my wallet. So if they were to steal my private keys and they didn't have that physical thing, the card or USB, they wouldn't be able to access my crypto. Similarly, if my card or my USB was stolen by someone, they still can't access the crypto. They have to have both. So it's just a way to further secure your cryptocurrency. Podcast to listen to is Markets Daily Crypto by CoinDesk. Crypto is Macro Now newsletter. And definitely be jotting these down if you're going to go with any of this stuff. NFTs. The largest NFT marketplace there is, if you just key in OpenSea.io in your browser, you can look up the Bored Ape Yacht Club or any of these other things that I've mentioned today. For news, I like the application on your phone called CoinMarketCap. You can look up any one of the 20,000 cryptocurrencies and then click the news tab, and there's news story after news story. I mean, there's 50 news stories a day on Bitcoin. You can really learn a lot if you're putting the time to read. Otherside.xyz is the website of the metaverse that Yuga Labs is putting on. And they really are, by the way, I didn't cover this, but Yuga Labs really is kind of like Bitcoin and everyone else in the world of cryptocurrencies themselves. It's really Yuga Labs and everyone else in the world of NFTs and gaming NFTs. They are the dominant player by far. Books to read: The Infinite Machine by Camilla Russo, I already mentioned. The Death of Money by James Rickards. This is one of my favorite guys. He's a Nobel Prize winning economist named Milton Friedman. He wrote a book called Money Mischief that was good. And then finally, Growth by Vaclav. So I'm at 1 hour and almost exactly 15 minutes. So I think it's a good time to open it up for questions and discussion.
If anyone has any questions, you can just unmute and ask away.
All right, if nobody has anything, I've got plenty of stuff I've got to get to. I appreciate the time.
Excuse me, sorry, good morning.
Hi.
Rachel Brathwaite here. Thank you so much for a very informative presentation.
You're welcome.
I have done some research on cryptocurrency. However, in the Caribbean, I'm not sure if you or anybody else can give insight as to how one from the Caribbean can invest in cryptocurrency, because I know it is, from what I read, I've observed, I've even tried to sign up so you get up to a point. So I just want to know, is there any, how can I find out how to invest if I wish to from the Caribbean?
Sure. So I'm definitely not familiar with what is blocked and what is not blocked. I don't believe in the Caribbean there is anything blocked that you can't access particular websites. So the first place I would start would be to go to coinbase.com, Coinbase, coinbase.com. And with just like you went to the website of a bank, it would feel similar. Like if you went to a bank and you'd say, I'd like to open an account, and then they ask you, what's your name? And la, la, la. It would be very similar if you went to coinbase.com and said, I'd like to open an account. Do you know, or does anybody know, is Coinbase accessible from where you are? I believe that it is.
Thank you so much. I will check to see.
Okay.
Thank you for that.
Hi, morning.
Morning.
Go ahead. I have one question. You mentioned that there are various types of cryptocurrency. Which cryptocurrency is most viable right now, and which one you would suggest a new investor invest in or purchase?
Good question. It's definitely far and away, as far as the most valuable by market capitalization, is Bitcoin by a long shot. And to any new investor that says, I only have so much, and I'm going to go to work for the next 30 or 40 years and earn a bunch of money. So anything that I have, obviously I don't want to lose that. It's important to me. I would definitely, anyone in the industry would say the same answer. So I don't have any qualms to say it. It would be Bitcoin. It's the oldest, the first, the most trusted, the most decentralized, and has by far and away the largest following of people who are proponents of the cryptocurrency, Bitcoin, BTC.
Okay, thank you very much.
Mm-hmm.
Hi, Rochelle here again. I tried to get onto Coinbase and it's available in the Caribbean. So yes,
Good,
thank
good.
you for that. Yeah.
You're welcome. Anyone else?
Okay, if we have no further questions, we would be ending our session now. We'd like to thank Mr. Peter Piacenti for his very valuable contribution, and we look forward to engaging with you in the future.
Thank you.
Thank you.
Have a good one.
You too.
Thank you.